All right, what's up, everyone? Welcome to the Financial Freedom Through Apartment Investing, proud affiliate of the GOB network of apartment investors, where we educate, empower, and we connect people to wealth. I am your host, Mark Caesar, and where we were supposed to have Mr. Damian Lupa on, but we have the next best thing. We have his right-hand man on, Mr. Parker Pursell. Parker, what's going on, sir?
What's going on, man? I appreciate you having me on. And I told Mark the other day when we first met, I've seen him from a distance for a while now. I've been kind of following his stuff, and our paths finally crossed 3 times in the same meetup. It just was kind of like it was destined to be. So appreciate you having me on, man.
I appreciate it, man. Yeah, it's like I'm speaking to a mirror of myself. We actually had a chance to talk on, I believe it was on George's meetup last week, and it was a talk of the minds. It was a great time to connect and got to learn a little more about you and what you do. But right now we're gonna hand you the reins. Where I'm itching to learn about that amazing title that Damien picked. Dub, your IRA is a ticking time bomb. That is a interesting title. So let me give you sharing capabilities. If you have bear with me 1 second. Mr. International, everything okay, sir?
Yes, sir. Everything's great.
Right.
Great day to have a great day.
I think Aubrey needs to she needs to be an influencer or something, because she is plugged everywhere.
She sure is. So you should be able to share now, Parker. If you have some slides that you want to share, let me know.
All right. Yeah, and I've been talking with a good bit of you through our meetups, and there's some of us who haven't met. So and I know that we kind of get to having some discussion about a lot of the things that are going on. So really what I'll hit on is kind of who we are, like what we provide, just the capabilities that you have. And then obviously the current tax law that was passed, that probably not a lot of people heard of because it happened within the tax courts, not, out for the media to see, which, to be quite honest, it's like the tax bill that comes in your mailbox that you never saw, or they said they sent to you 2 years ago. And that's kind of what I feel like this is going to be. They aren't going to tell people about it. They're just going to go out and hit people with it. So without further ado, yes, I'm Parker Pursell. I am our strategic partner developer here at the EQRP company. And I'll give you a little context as to who I am. This is my family farm that I grew up on about 45 minutes south here in Sylacauga, Alabama. This is a golf course. We have a family-owned resort business, 81-room property with 3 restaurants, golf course, a lot of other things that are kind of happening out there. But that was not there when I was a kid. So I grew up out in the pastures and doing a lot of work with my parents, and it's kind of where I grew up and learned how to work. This is my wife. She's a fitness coach here in Birmingham, and she is just, she's my life. I love her to death. We've been married 7 years and no kids yet, but she keeps me in shape. So I'm thankful for her in doing so, keeps me accountable. So New Year's coming up, she's going to hold me accountable to a lot of things, especially in the fitness world. These are 3 things that I hold dear to myself, which is faith, relationship, and competition. They're 3 core values that I live by. And if I can get better in all 3 of those aspects each and every day, then I feel like I've made an impact in terms of just my life and how I want to live it. Progress, not perfection. I want to move forward. I know that I'm not going to be perfect. None of us are. But if I can make some progress in those 3 areas, and I get to do all 3 of those things in the day, then it's perfect. And I'm doing exactly what I want to be doing. So what this is, we're all very aware, it's just COVID. What kind of brought me here to the EQRP was I have a background in Chick-fil-A. I worked there for I graduated school, worked at a startup for a year, went to Chick-fil-A for about 2.5 years in Pensacola, ran a store down there, helped a friend of mine who was the owner of it get it off the ground, got to travel the country, went back to my family business for 4 years and did a number of roles there. We were in a multi-million-dollar expansion of our property and got to help in a number of different areas. And when COVID hit, we had to make some organizational changes, and I was a little stuck in my development and just didn't know where I was going to go next, because obviously we were pulling back, and I felt myself like up against the ceiling, and I needed to break out and go learn some more things. And so I took a step of faith and just volunteered myself to, be one of the people that was cut from the list and didn't have a job, didn't know what I was going to do, pressure washed for 8 months. Paid all the bills. God really stepped in and provided in that place. And so for 8 months was just fielding opportunities. Was fortunate to have them. I just waiting for the right thing. And then a friend of mine, we were in a Bible study together, and he said, "Hey, I got that. I'm working at this company. I think you should go talk to the owner." So I said, why not? I took every opportunity to chat when it came my way. And funny enough, I ended up finding this company called the EQRP. I had no idea what it was. I had this very traditional way of thinking about retirement companies like Northwestern Mutual, a financial planner. I'm sitting here thinking I'm going to be a suit that's just asking people to go have coffee 24/7. And that's not what I want to do. Didn't know what I was stepping into, but little did I know how much this company would just transform the way that I think. And really, it's just a testament to Damien and how he thinks and why he created this tool, was because he was caught in a system that took control away from him and everything that he had worked for. And he said, there's got to be a better way. And so the reason I love this company is, y'all know who this is. This is William Wallace from Braveheart. And that's what it felt like walking into this environment each and every day. Was we were on mission to help liberate and free people from the financial shackles and bondage that holds them down. And so, for us, that is our mission, is to help break the financial bondage of 1 million people. So if we have this aspirational number we're shooting towards, then it keeps us hungry each and every day. They say, like, well, if you're overweight, you're like, well, I just want to lose 5 pounds. Like, you probably aren't going to take it serious, right? But if you say, I want to lose 100 pounds and I want these like specific metrics that are going to really take you a minute to get there, you're going to probably hustle a lot harder to get to that goal than doing something easy. For us, we feel like 1 million's a great number, because that 1 million could be a big tidal wave of influence to other people, just sharing their story, how this has transformed them and how they think about money. So we're really big on education, and why I'm just very thankful that Mark has allowed us to come on and speak is this is why we do what we do. So if we can help you guys think a little different, then we've done our job here on this webinar. So the IRS is going to be the person who holds the biggest shackles over you. Why? Is because you're going to get taxed over 70% of what you earn in your lifetime. It's a crazy number to think about, but the IRS exists to just tax the heck out of us. And so for me, I was in this mindset of the only way I'm going to get wealthier is to just hopefully get a raise, really kind of like earn my way to this place of financial freedom. And I was very limited in that thinking, but we understand that the wealthy think, how can I get that number to zero, right? The more knowledge that we take in, there is a way to get to zero. So just as Apple and Steve Jobs had this crazy ability to think differently about the future, think differently about what they were bringing to the environment, we have to be able to invest different. So if we want to be able to get there, we're going to have to think about how we're using our dollars to get us to that number. And so enter the EQRP, which is just one of the many tools that can help you get there, right? We like to say it's the Ferrari of the 401k tax code, because there's so much that you can do with this plan. And Damien the reason, like I said, that he created this was that he was in such a place of constraint and control, and people telling him what he had to do. He said, there's got to be a better way. So he just opened up the tax code and said, I'm going to go hunt and see if I can find something better. And he did. And so for us, we've helped free over $600 million of people's retirement into a self-directed place. And that number is really more of a reflection of, the financial bondage that's been shaken out of Wall Street. Now, we're not saying that the stock markets are terrible. You should never invest in stocks, but Wall Street is this institution that's got a grip on so many people in this country in a number of different ways. And so for us, this number, the number is really not important. Really, the number of lives that are attached behind that number is what's important. And this is just a reflection of kind of what's continuing to move out. And that number is continuing to increase each and every day. So why haven't you heard of this? Well, it's because of Wall Street. So the last thing they want you to do is take your money and use your knowledge and invest it in things that's going to reap you the biggest return. Because every time you give them a dollar, guess what? They get to keep part of that dollar just to sit on it. And every single one of you on here, because I've interacted with a lot of you, I see you at the meetups, like you're learning all this knowledge to be able to go help grow yourself, grow your net worth, and do it yourself. I'm not saying don't have a team with you, but the stigma in Wall Street is if you don't, they don't think that you have the education to do what they do, right? And that's a lie. So that is why you haven't heard of it, because it doesn't benefit them. So what the EQRP is a checkbook controlled retirement account. You can fund deals in under 5 minutes. There's liability protection built inside of it. No Ubit tax, which in real estate, this is a really big deal. And you can have this by yourself, like a solo 401k, or you can have employees, which is a big difference between what a solo 401k is and this, is that this plan is very adaptable to fit your situation as a business owner. And we'll talk about that a little bit later. But you have the ability to invest in real estate, global real estate, like internationally, gold and silver, crypto, obviously super hot topic. And you've probably heard a lot come from me on crypto, which I'm very bullish on it. But you can invest in it with your retirement, which is awesome. So let's get into the IRA. And well, let me go ahead and hit on this before we jump in. So what happened recently, and I'll shoot you the case. I'll have to look it up before we close out, Mark, and I'll give y'all the link to look up this tax case that just got ruled on. But the long short of it is the way that IRAs are legally set up is there has to be an independent third party that controls. So people that get into self-directed IRAs with checkbook controlled LLC, the way those checkbook controlled LLCs are written is you as the 100% manager of that account. So it was kind of a loophole that they figured out and they started building it, but it was a gray area because the way it operated was not in the way that IRAs were intended to operate. This case, there's an individual that had a checkbook controlled IRA, and she had bought some precious metals and then housed them herself, which is not how you're supposed to do that. You're supposed to give it to a third party for them to house, or a fiduciary responsible third party to hold that, but she took it herself. And so what happened a few months ago, right, is the Congress wanted to take self-directed IRAs completely out of the game. And Congress and the IRS are in the same bed together, all right? And what they saw in this situation specifically, the IRS controls retirement accounts. It is where they were created. It's where they were built. So guess what? They can rule on this without Congress. And that's what they did. They said, you cannot have a checkbook controlled LLC inside of your IRA and be the manager of it. So what they said is you can circumvent that by giving managerial control to someone on a horizontal playing field that's qualified. So vertical is disqualified, being spouse, child, just like direct bloodline, right? But you think brother, sister, cousin, aunt, uncle that sits on a horizontal aspect of a family tree, right? You can make them the manager. That is terrible advice. And that is not what I'm saying do if you had a self-directed IRA, but that is what they are proposing you do. And it's one more aspect of adding friction into a system that eventually is going to get shut down. It's just going to. You got a big target on your back. And Wall Street controls these politicians, and Wall Street pays them. So it makes complete sense why, if IRAs are primarily retail, that they would try to steer all that money out of the IRA, the self-directed IRA market, back into Wall Street. 401ks are not controlled by retailers because legally they're set up as you being the trustee. So as you can tell, it is now, it's illegal for you to have 100% control of a checkbook controlled LLC and invest. If you continue to do so, it'll be disqualified, penalties. It's a negative event you don't want to have happen to you. But you can essentially change your vehicle and be completely okay and do exactly what you want to do that you're doing now, just with an EQRP. So we'll get into just this aspect of the differences between the two. I wanted to just hit on that because I know there's some of you that probably heard the rumblings and me talk about it. But I want y'all to kind of hear it firsthand. And if y'all have questions on the back end, feel free to ask. So with IRAs, there's a custodian that's involved, and it's super slow because you're going to always have to go to somebody else to get permission to do something. And we always talk about in this environment, it's opportunities. Y'all are doing underwriting, you're doing deals, and you're waiting for that right one to just come across so you can hop on, or whether you're an investor, that one deal comes across the table. If you don't act quick enough, then you're going to miss out on a great opportunity. Having something that slows that process up is never a good thing. So debt that's associated with Ubit tax, there's the contribution limits with self-directed IRAs, which are pretty low. And then you get into the EQRP. It's fast because legally the way it's set up, you're the trustee. There's no Ubit tax on debt. So debt is your friend inside of this plan. And then you can contribute up to $64,500 a year, which is almost 10 times the amount of what you can inside of a self-directed IRA. So we'll go into a case study of just syndicating a deal and what it looks like with these two different accounts. There was a hospital that we purchased, or a client of ours purchased, $50 million. So we'll talk in percentages here. 20% was put down in cash, and then 80% of it was leveraged in debt. 5 years later, sold it for $100 million. So if you had invested $100,000 from your IRA, and since it doubled, now $80,000 of that profit owes tax up to 37% because you used an IRA. And it's called Ubit tax. It's unrelated business income tax that is triggered by unrelated debt financed income. Basically, what the government says is you use something to help benefit you more. That wasn't your money, so we should get some of that back, which is, once again, you're always going to get taxed at every turn, and we're looking to get that number to zero, right? So Ubit tax, unrelated business income tax that's triggered by unrelated debt financed income, because 80% of that deal was leveraged and you made $100,000. That's why 80,000 of the profits was taxed up to 37%, which equates up to about $29,000. So you're just giving that back to the government. Okay. So IRAs are going to pay 29, EQRP investors pay 0 because we're exempt from that tax. And we say that because we just have better lobbyists. 401ks are controlled by corporations. So we obviously understand how big companies work in our country, and that for the government to really hurt big industry and big companies, is probably not in their best interest because there's a lot of money that flows to them from those companies. So we'd just like to say 401ks have better lobbyists that go in there and fight for them. So if you're already invested with a deal inside of a self-directed IRA, is there hope for you? Absolutely. So what it's called is an in-kind rollover. And what you're doing is just changing the vehicle for how you're investing. So you're going, driving this IRA vehicle, and let's say you had a deal that was closing, in 2 weeks, you had your IRA and you're about to get hit with this massive tax bill that you're going to have to pay. What you can do is switch over and change the vehicle literally 2 weeks before you sell. And then guess what? Now your investment is inside of a 401k structure and you're not going to have to pay that tax. So that one move alone could save you $30,000, which is incredible, right? And there's a lot of people that don't know about this. And this is where I get kind of passionate about, like, if you're a syndicator out there, like pushing self-directed IRAs, it's not a matter of like my thing is that when you have the knowledge and you know that this could hurt your investor and they could be hit with a massive tax bill and they just may not know, like, it's our job to educate and tell them and say, hey, like, you may be doing it this way, but there's a better way to save you a lot of money if you do it a different way. And I don't know any investor that would say, oh, nah, I'm good. I just want to keep paying taxes. That's fine. They're not going to want to do that. So you can switch it and you'll be good. Who's qualified? Basically anybody. Syndicators, self-employed individuals, passive investors. If you got a W-2, that's fine, because guess what? If you got side hustles going on, like a lot of you do, you're working a W-2 and then you're trying to build your real estate business on the side, you're qualified. And if you got a small business up to 50 employees, you can still self-direct your retirement into all these different alternative assets that you want to get into with complete control. So there's two ways to put money inside of this. You can do it through rollovers or contributions. Basically, anything can roll over into this EQRP other than a Roth IRA or an inherited IRA. And you may ask, why is that? It's just the rules. They won't allow them to move. They're basically stuck. Or you could contribute to this plan up to $58,000 a year, $64,500 if you have the catch up. You can do deferred or Roth, and there's no income limit either that's attached to your ability to contribute. So what the Secure Act did was essentially give you the ability to bring in full and part-time employees and hire anytime inside of this plan, which was awesome. Solo 401ks, you have to shut down those plans if you're a small business owner looking to build out your team, which this happens to a lot of people. You get forced back out of the self-directed space into the more traditional retirement route. And now you may have all this cash coming in, but you just have to stick it in a mutual fund and hope it continues to grow, right? You don't have control of it. You can't touch the asset like you can in real estate. So that's why we introduced the Safe Harbor plan. And it's essentially just an EQRP plan for business owners. So it's custom built. You can do matches or deferrals. It includes TPAs. So there's fixed costs too that's associated with it, which is great. A lot of people don't look at what they're paying inside their retirement because you're just getting nickel and dimed here and there, not paying attention. And if you actually went in and looked, if you had a small company, at what you're paying per year, it's actually pretty staggering. So it's always good as a business owner, especially myself. I love fixed costs because I know exactly what's going to happen every single year and I'm not having to worry about it. So there's no custodians, there's complete checkbook control, you got asset protection built in, and obviously no Ubit tax. You have the ability to invest in crypto, real estate, gold and silver, all the things that you get with the EQRP, and everybody's happy. And I think a cool thing too for this is that you have the ability, and I love what Aubrey's doing. We talk about this all the time and I give her mad props, but I think it's a great education tool as a business owner for your employees to say, hey, like, here's an opportunity for you to learn how to use your money and invest it in things that you may not ever get to, right? and we can be the coaches for the employees as they're looking to self-direct, which I think is awesome. Because I've seen how much it's changed my life in just the short term that I've been here. But what I've learned under Damien in under a year, I truly believe has altered the trajectory of my life financially and where I'm going to be, 5-10 years from now. So there's a couple of different bonuses we'll talk about, which is K-Roths and $50,000 line of credit, which you get. This was a case study that if you're a real estate professional, you could essentially utilize your status as a real estate professional to not pay taxes. And we had a client that came to us that she was a dentist and her husband was a real estate professional. They converted $300,000 of their retirement to Roth, but they also had bought a building that year, $1 million, and realized $300,000 in bonus depreciation. So now their tax is completely zapped. So because of the bonus depreciation they got, and then they converted the $300,000 to Roth, there was no taxable event that happened. It just nixed itself out, which is awesome. So now everything inside of their retirement plan is basis, which is great. So it's another interesting tidbit. Like we say, knowledge is power. And this is another unique way to use your real estate professional status to help offset the conversion of any sort of income inside of your retirement plan to a tax-free environment. So the K-Roths are, if you have kids, this plan is great because you can contribute up to $12,000 in Roth income. It's a minor deduction. So you can write off the $12,000 on your personal income, but also contribute $12,000 to your kids' retirement plan up until 18, to where everything that you put in there is basis. You can invest it. You can treat this the same way that you would in your retirement plan. And then by the time you get to college, right, you could pull all that money back out and use it to pay for school. But you can continue to invest and self-direct this income for them as well, and take the write-off for it as well, which I think is awesome. And that's actually a picture of Damien in the screen. He was a JCPenney model way back in the day. And I'm like, I've never seen you with hair, Damien, so I don't even know if that's you, because he's bald. But there's also a $50,000 line of credit guaranteed. This is a picture of Damien went to Costco and wanted to go buy a pallet of toilet paper. I think this was back in 2008 when the markets crashed, and he had an American Express Black Card, right? So when you think, I joke about this with people, but the Black Card, I always envision like a helicopter landing on top of your house, people jumping down and bringing this super cool suitcase and opening it up, and there's your American Express Black Card. You're like, I've made it. Like, nobody's ever going to tell me I can't buy anything. And he went to go buy this pallet, and they declined his Black Card. And come to find out, they had put a limit on his card of $11,000. So they tell you that you have unlimited ability to spend. And then they told him, well, we're just going to go ahead and cap you right now because we obviously don't have our stuff together on our end. But with your retirement plan, none of that's going to happen because it's your money, you control it, and you can pull up out to $50,000 and then pay that back over 5 years, plus or minus 1 prime interest rate. So you could take that, the transactions looked at as your retirement plan, and you could take that $50,000 and go use it for whatever you want. You go buy beef jerky with it. You can go buy, motorcycle, whatever. But I think it's a great, extra bonus investment opportunity because you're making money off of yourself. When you pay it back into your plan, you could make 4% on just the loan yourself, on top of whatever you're making on your investment. So if you got a deal that's 20%, we'll just say guaranteed rate of return, you're now making 24% overall because you took that money out and you're going to pay it back, but you're paying that back into your plan. So I'm like, it's a pretty good way to utilize a system that gives you the ability to go invest in any sort of active deal. And our team helps talk through all of those situations with our clients. And that's kind of what we are, is like an Apple Genius bar for our clients. So the two biggest things that millennials and boomers are thinking about, I mean, debt is obviously looming more and more these days, especially when you look at education, but retirement is the number one concern. And so it's our job to help educate any and everybody about what is out there. We'll help teach your investors as you all are out there building deals. It's what we love to do. We're the experts in this space and can talk through each and everybody's specific situation and see if it's a right fit for them. And so, you know, that's all I got. I'm going to open up the floor to questions for anybody if they have it, but this is the way you can reach me. And obviously, I think most of us are connected on LinkedIn, so you can holler at me there, but this is my direct contact as well. And that's all I got, Mark.
And I appreciate that, Parker. That was actually a wealth of knowledge, a lot to unravel. So we're definitely going to open up the floor to anyone who has any questions for Parker in regards to this amazing topic. Feel free to unmute yourself and ask away. Seems like everyone is very knowledgeable.
Great presentation, Parker. Appreciate it very much. Great presentation. Let's go Auburn. You're Auburn, right? Alabama.
What'd you say?
You Auburn or Alabama?
War Eagle, baby.
Okay. So now on the QRP, right? Is there a minimum?
Minimum what?
You can put in.
No, you can just open it up with $0 and start contributing to it. Or if you have other old retirement accounts that you want to move over and self-direct. Some people have like old 401ks, other traditional IRAs that they want to take control of and utilize, and we can get all of those moved over. You know, what our team does is takes over everything from A to Z. So when you become a client, I like to say you get out of the driver's seat and then we hop in and then do everything for you. So you don't have to worry about being taken advantage of from your previous custodians. You know, there's a lot of uneducated people in this space that unfortunately operate these moves and transitions. And we've had to actually go back and fight previous custodians because they have initiated a taxable event for our clients because A, they didn't understand, B, they honestly just don't care. They work in an environment where it's very convenient for them to just push and transition you another person. So you don't have to have money to start, but if you've got some you want to contribute and put away, then this plan can start with nothing or start with a couple $1 million, whatever you want.
Thank you.
Does anyone else have any questions? Seems like everyone is actually very knowledgeable on EQRP and how to save money. Yes. I do have a question. It might seem a little minuscule or not or so, but is EQRP an acronym for something?
Yeah, it stands for Enhanced Qualified Retirement Plan. And so that's Damien's personal branding on that space. So QRP stands for Qualified Retirement Plan, but he came up with the moniker first, and he just likes, you know, he's just a little different with everything he does, especially with his marketing. So Enhanced Qualified Retirement Plan.
Gotcha. Now I do follow-up question. How can I put this? Does this apply to like someone who has like a pension as well? Let's say, you know, someone stopped working and they have a pension that's just sitting there. Like, how does that work?
Yeah. So in my experience, pensions can move over inside of this plan. It just really gets into sometimes how they're written, because pensions are controlled by, they're not all the same, right? There's a lot of different groups control them. So I'll say majority of the time they can, but I like to call and say, hey, let's just get on the phone and see what they'll allow you to do. But those can move over into this plan. I'd say about 95% of the time they can. Other times I've just seen in one-off instances them not be able to, but it's just because of the way that they were written years ago, whoever the union was that wrote them.
Cool. Appreciate you answering that.
Mm-hmm.
So again, guys, the floor is open. If you have any questions, this is the time to probe and learn.
Let me ask a question on just to the audience. Do y'all have individuals that are utilizing retirement plans to invest in y'all's deals, or is it a topic of conversation that y'all even get around to? Maybe not.
That subject has not been broached yet for me. So that's a question I should ask when I do that. Right. So how would you put that into words for somebody who has an IRA that could do that?
Yeah. So what I tell people is, especially when it comes to what we do, you're like a relationship broker, right? I think the key question is you'd say, hey, if you know they're a real estate investor, you know that they're savvy. I like to say savvy or sophisticated in the sense of how they're using their income. It's like, have you ever thought about utilizing your retirement to invest in some of these multifamily deals or whatever deals you have going on passively? And they're like, well, I've never really thought about it. Didn't know I could do it. Says, well, I got somebody I could connect you with that could help you understand more about that. But people just don't think about it. And to be quite honest, Wall Street doesn't want you to think about it. But when you look at, I've been trying to do some research on like, what is that number to retire comfortably? And I want to say, I was talking with Damien about it, and it was around $2 million to be able to take care of like all your medical expenses, the care, to live a decent lifestyle, right, that you want without having to think too much about, am I going to be able to, cover my costs until I'm dead? And with inflation, as we see continuing to rise, that number is just going to keep increasing. And so if we aren't beating the CPI index, which we know it's higher, they're just reporting it as 6%, but I'm very convinced it's much higher than that, then are you keeping up with that number in your retirement? And if you're not, then you need to start thinking about it differently to be able to get to the place that you want to.
Thank you, Parker. Thank you very much.
Appreciate it, Lawrence.
Anyone else have any questions or thoughts on this topic? All right. So with that said, you guys can definitely go visit. I believe the website is eqrp.co.
Yep, CO, no M on it.
Gotcha. So eqrp.co. Quick shameless plug. I also had Damien on my podcast not too long ago. He shared a lot of information about this specific topic as well. So that episode will be dropping out tomorrow. So it will be in congruent with what Parker just shared. That's pretty much it. So guys, we want to thank Parker for jumping on. We're going to jump into our after party. So we appreciate your time, Parker, and this amazing presentation. And you did an awesome job, man. I definitely need to reach out to you guys and get a consultation going on my end about this, about EQRP for sure.
Heck yeah, man. Well, I'll see a lot of you all in the meetups. I'll be speaking tomorrow at Daryl's meetup just about the IRA, the change, just kind of what's happening, and allow people to ask questions. And a lot of what you heard tonight will kind of be the topic, but it's just pay attention to what's going on. IRAs have a massive target on their back right now because it's a retail driven tool, and Wall Street wants that money to themselves. And so for you people who are, out there investing in yourself, trying to grow yourself financially, free yourself from the W-2, right? It's where you wake up each day and you get to work. You don't have to work. You need tools like that that continue to help you get to do things, not have to do things. And this plan helps you get to live the life that you want. Doesn't make you have to do what you want to do. So, but I appreciate y'all's time and look forward to seeing you all soon.
Awesome. All right. So until next time, everyone, we're out.